Reuters, Wall Street. Euro trademark's main indexes dropped on Monday as a move to check Chinese investments in U.S. technology firms further raised tensions between the United States and its trading partners. The U.S. Treasury Department was drafting curbs that would block firms with at least 25% Chinese ownership from buying U.S. companies with a euro or industrially significant technology, a government official said on Sunday. A separate report by the Wall Street Journal said the U.S. Commerce Department and National Security Council were proposing or enhanced euro export controls to keep such technologies from being shipped to China. Technology stocks bore the brunt of the news, with the S&P Technology Index falling 1.5%, the most among the major S&P 11 sectors. The Philadelphia Semiconductor Index dropped 2.3%, with chip makers taking a hit as they depend on China for a large part of their revenue. The move marks another escalation of President Donald Trump's euro trademark's trade conflict with China, which has sent ripples across financial markets and threatened to dent global growth. Harley-Davidson dropped 1.2% after the motorcycle maker forecast additional costs due to European Union tariffs. Trump, last week, threatened to impose a 20% tariff on all European Union car imports. The EU, which has promised retaliatory measures on Harley-Davidson, Bourbon and other products, vowed to respond. Catalyst for weakness is overnight reports pointing to White House plans to tighten restrictions on Chinese investments in the U.S. and limiting tech exports to China. Moreover, EU rhetoric continues to be tough. Peter Cecchini, chief market strategist at Cantor Fitzgerald in New York, wrote in a client note. At 9:56 a.m. ET, the Dow Jones Industrial Average was down 255.62 points, or 1.04%, at 24,325.27, the S&P 500 was down 24.51 points, or 0.89%, at 2,730.37, and the Nasdaq Composite was down 98.58 points, or 1.28%, at 7,594.23. Brent crude prices fell about 1.7% as investors prepared for an extra 1 million barrels per day in output to hit the markets after OPEC and its partners agreed to raise production. The S&P Energy Index was down 1.4%. Campbell Soup jumped 7.6% after a New York Post report that Kraft Heinz was considering buying the company. Kraft Heinz rose 2%. Declining issues outnumbered advancers for a 3.17 to 1 ratio on the NYSE and for a 3.40 to 1 ratio on the Nasdaq. The S&P index recorded 5 new 52-week highs and 11 new lows, while the Nasdaq recorded 26 new highs and 26 new lows.